Yes. Okay, good. I'm finally live on. There it is. Let me see. How come I am not live on Instagram? We're back with another video. Here we are. We're back with another video. Um, it looked like I had to restart a lot of stuff. But again, we're back. Give me a second here. So this is. I know TikTok, Instagram. I'm like, there it is. But again, we're back. There it is. Okay, we're live. Boom, we're live on Instagram. So, as you guys can see, the title of it is Stocks and Mortgages right now. Stocks have skyrocketed to the roof. But before we get into the video, make sure you guys are liking, subscribing, following for more information on this, because I'm going to keep you guys up to date on what's going on right now within the world. So with that being said, let's get this video started and let's, just dig right into it. So as you guys can see, stocks near records and mortgages applications surge. What is the reason behind this? It is because there has been the interest rate has fallen by 0.5%, right? Interest rates have fallen down. So, with that being said, a lot of people are going to be borrowing more money. What does that mean on the other back end of things? It also means that you will not be there's going to be a competitiveness when it comes to borrowing money. So if your what is it called? Your credit score isn't good, you have bad payments on certain things, you have levies, you have liens on you, it is going to be harder to borrow money at the very moment. That is why you see mortgage applications right now are skyrocketing through the roof due to the reason that the interest rate has fallen. But we're going to deep dive into this video here, um, and we're going to talk about it. But before we go into that, I just want to read the article with you guys. It says U.S. markets, and this is coming from Yahoo Finance, a very credible source. But if you guys are on here, make sure you guys are tapping the. If you guys are on my TikTok, tap the screen. Like this, share it with your friends. Also, if you guys are on Instagram, make sure you guys are tapping the screen as well and commenting down below. I'm going to be going back and forth right now when it comes to my phone on TikTok and my other phone on Instagram. So I will be answering questions. Just bear with me. It's just I have to go app to app to app to app. We are live on YouTube, so if you're not subscribed on YouTube, make sure you're following YouTube, and you will find me at Chavez Financial. Instagram, you will find me at ChaviChavo97, and on TikTok, you will find me at ChaviChavo97 as well. But with that being said, U.S. markets, DJI, GICP, XIC are looking to continue the momentum after the S&P 500 saw its 41st record high of the year yesterday. Investors now await Friday's personal consumption expenditures, reading which could provide the insights into Federal Reserve future monetary policy decisions on the housing front. Mortgage applications surged to their highest level since 2022. So if you're a mortgage lender right now, you are banking. If you're in any type of real estate right now, you are banking and selling these houses right now because you are getting a boatload of applications. Um, on the housing front, mortgage applications surged to the highest level since 2022. That's crazy, guys. That's 2 years ago. With refinancing seeing the highest jump, I knew as soon as the 0.5% was going to happen, there was going to be an influx of refinancing people's homes. So a lot of people kind of probably cashed out. The move comes after the Federal Reserve. Oh, sorry. With refinancing at the seeing the highest jump, up 20% week over week. So since the announcement, it has gone up 20%. The move comes after the Federal Reserve cut interest rates last week. Yahoo Finance is trending tickers spotlight Aurora Innovations, Nvidia, and the Home Depot. So the Home Depot, why is the Home Depot probably skyrocketing in stocks right now? It's because a lot of people are going to fix their houses. A lot of people pulled out equity to refinance their home as it skyrocketed to get a new mortgage rate at a lower interest rate. And so they used the money and pulled out the equity to build up their homes. That's why you see the Home Depot right now skyrocketing. Well, not skyrocketing, but its stocks. Let's look at the Home Depot stock really quick. Home Depot stock. So as you can see, when was this? You're starting to see a trend here that's starting to go up. But this was 10 a.m. It's down 37%. But let's see within the last 5 days. As you can see, boom, it just surged. It was sitting at 390. You know, now it's up. Its highest was 401, so it went up about about $11, which on that end it's very high. Let me see if I can fix this screen right here so you guys can see it, which is very high. You know, for that jump to happen, it jumped by 5.93 points, 1.52% in the past 5 days. What about the month? You see it's surging to 6% in a month. That's amazing. So you're talking about a whole $36 difference there. So as you can see, it was $360.05 US dollar. So right now, stocks are up. Stocks are what's in right now. Stocks are doing really well. So if you guys are in the market of stocks and investments in your 401ks and all that, they should be up. Key guest, yep. So let's watch this video, see what Yahoo Finance has to say, because this is very interesting to me, on how much it has gone up. So with that being said, let's get back into the video. But if you guys have any questions, comment down below, and if you guys have any questions, comment down below, and I'll let you guys know what to do. But stocks right now are looking beautiful. I'm gonna always support you, bro. People have to understand the knowledge and what to do in any situation. Absolutely. Good comment, Marquise Jenkins. So let's watch this video. I know you won't be able to see it well on TikTok, but that's okay. You can just tune in and listen.
Change this morning after the S&P 500 and the Dow closed at record highs Tuesday. It was the S&P 500's 41st record close of the year. All three major averages are on track to post monthly gains. Next big test for the market, that's coming on Friday. We will get PCE, the Fed's preferred inflation gauge.
And semiconductors are in focus today with Micron's fourth quarter earnings out after the bell. The results will be a crucial test for chip makers. The sector has underperformed the broader markets in September. Positive commentary on demand for AI products could breathe new life.
AI products. He just said it. AI products are huge right now. If I were you, I would go into AI and look into and invest into AI stocks. That's my opinion. That's not financial advice. Don't sue me. But right now, yes, that is looking nice. Let me see if I can make this smaller. Oh, I can make this smaller. So you guys are able to see it.
Into the AI trade after hotly anticipated results from Nvidia last month disappointed some investors.
And Vice President Kamala Harris is set to unveil more details of her economic plan in Pittsburgh today. She's expected to tout manufacturing activity under the Biden-Harris administration and discuss ways to further boost the sector. Her comments will likely stand in stark contrast to former President Trump, who recently described manufacturing trends as, quote, a horror show earlier this week.
Oh, this is a 2-hour video. We're not going to stay here for 2 hours, first of all. Let's get to the bread and butter. I think the video is going to be
Taking a look at stock futures this morning.
Let's watch this.
And we've got the Dow, the S&P 500, and the NASDAQ all lower across the board right now. Flat barely to the downside
That's
for the Dow
fine if it's
and the S&P
lowering,
500.
but we're just gonna
NASDAQ
wait till
futures,
Friday 'cause
just
the PCE
0.1%
will be coming out.
in the red. Stocks, though, this is the context, have hit fresh records this week as the easing cycle kicks off from the Fed. Investors now have plenty of upcoming data to assess the broader health of the economy and solidify bets on whether or not the Fed will deliver another jumbo cut in November. Take a look at this. Currently, markets slightly favoring another 50 basis point reduction at the FOMC's next meeting. Joining us now, we've got Brian Jacobson, who is the chief economist and strategist at Annex Wealth Management here. Brian, great to have you here with us. Are you in the camp expecting another jumbo cut?
You know, I think that I am warming up to the idea that they might do another jumbo cut. Honestly, I was a little surprised that they did the 50 basis points last time. And so maybe I'm just trying to hedge my bets here because I thought that what they laid out as far as 50 basis points and then 25 and another 25 for the balance of this year kind of made sense. My fear is that we're going to see a little bit more labor market weakness. And if you kind of think about the balance of data that we're going to get between now and when they meet next, we get one more inflation report, and then we get two more job market reports as far as the employment situation report. I think we're going to see a little bit more cooling of the labor market, which might tilt them more towards a 50 basis point cut as opposed to a 25.
So in that event, what are you expecting in terms of the labor data, especially as that's come more into focus and much more pressing for the Fed at this juncture?
Yeah, it's really interesting how a lot of businesses have.
Sorry guys, I gotta just do this really quick. I gotta move this over here, move this over here, and move this over here. I'm sorry guys. Well, we should be good now. I just have to make sure I see the comments down below. A lot of people are messaging me.
Have really tried to shy away from going out and actually laying off individuals, discharging people. And so if you look at the job opening and labor turnover statistics data, the JOLTS report, that shows layoffs and discharges as a percentage of employment are very, very low. Yet the hiring rate is also very low. And so it's almost like they're trying to hang on to the employees they have and just let their workforce naturally kind of shrink through what's called attrition. Now, my fear is that we're going to see that layoff number begin to slowly move higher, not necessarily abruptly. And if that moves higher before the hires rate increases, we could see more weakness. That's likely going to become evident next week, Friday, when we get the employment situation report for the month of September. And then right before the Fed meets, the week before, on November 1st, we get the employment situation report for October. That will probably show further cooling of the labor market.
Brian, are those the two most important reports for the market for investors to be watching at this point?
You know, from a macro perspective, I think that they are. But in terms of what's most important for the markets is October 11th is when we kick off earnings season. And right now, when we go into that, according to some of the FactSet numbers that we've looked at, it says about 4% year-on-year increase in earnings per share, which is a very muted increase. Yet when we look out to what about for 2025, investors seem to be penciling in about a 15% increase in earnings per share, which seems a little aggressive. And so I think that really the biggest data releases are going to be when we get into the thick end of earnings season there.
And so what are your...
The report of the employment will be coming out, so that is a huge indicator of where the market is, especially what will happen with stocks either going up or coming down. If the number of employment is down, which is unemployment is down, that is a good thing. That means people are at work. Now, if there is people like last time when they came out with that event, it just plummeted stocks. So depending on what's going to happen, and I have a hunch that since we're in election year, they're going to state that employment is at a high right now. I think because the Biden administration wants to still win this election. So with that being said, I do believe that it will they will say that it's gone up. and unemployment has gone down. Excuse me. But if you guys are on here, make sure you guys are commenting. I'd love to answer these questions.
Anticipations as we kind of look into what this next earnings season can hold, talking about some of the companies that are expected by the market to continue to show this broadening out, this earnings growth, but at the same time where the macro backdrop that the executives, the CEOs are going to have to discuss, that certainly is more concerning than it was in quarters past.
Yeah, so when I try to correlate what's been going on with the macro data with what's going on with the earnings estimates, the month of July was actually a fairly weak period of time for economic activity as it relates to businesses. And so that's going to be captured in those earnings reports. So really that 4% year-on-year increase in earnings per share, I think that maybe that's a little too aggressive, even though it seems fairly muted. And so we aren't necessarily going to see that broadening of gains on the earnings front. Earlier this year, the earnings gains were really driven by, a few chip companies, technology companies. There's been this expectation that we're going to see that begin to broaden. I think it's still a little too soon to see that. That's why here at Annex on our investment committee, while we were overweight equities when we actually were emerging from that August 5th low, we've actually trimmed that back to be more equal weight. We're not sure that it's actually, you're compensated for the extra risk associated with overweighting equities in this type of environment.
If you guys are on here, make
So
sure
then,
you
Brad, what
guys
does that then tell us
like
about
the-
this rotation trade
like
that we
the
started to
live,
see? If we're not
please.
going to see that type of
But we're
earnings
gonna
growth that maybe
continue
the
to go
market
over
is
this.
expecting here, we're not maybe won't live up to expectations. What does that mean then for gains from here on out? Will
50
they then
BPS
likely
cut
be
should
muted
be
at this
base
point?
case for November.
Yes,
I agree.
that's our view, is that actually as we go into the year, it seems like everybody was expecting September seasonalities. It's always a rough month. Well, it's been pretty good. And then everybody thinks that, oh, well, when you
He said a key thing right there. September is usually a rough month. As an accountant and working with a ton of businesses, a ton here at Chavez Financial, we work with a ton of businesses. When we do the statement cash flow, especially for the, what are we in? February, March, April, May, June, August, September, July, August, September. So September is usually the end of the quarter, and we usually see quarter three, Q3 numbers are all tend to be lower than Q1, Q2, and Q4. It's because everybody's on vacation, everybody's on sabbatical, it's summertime, so we see that stocks, a lot of people buying, a lot of people doing this, a lot of people doing that, tend to be a lot lower. So usually Q3 is always a hit, especially within the stocks. It depends on what stocks you're investing in, but we tend to see it a lot lower.
come out of an election, that's always, on average, it's been good. Well, the problem is the market never gives you the average returns. It gives you that over time as you go through a number of these cycles. So if everybody's kind of banking on, we get clarity with the election, we know the Fed is cutting rates, and then it's, off to the races come November, maybe we've pre-partied a little bit in terms of the gains here. And so for the balance of the year, we're expecting more choppiness as opposed to a clear direction higher.
Not yet.
Okay, and so as we're continuing to track some of the most recent highs over the course of this week, I mean, a lot of investors trying to figure out, especially if you look at some of the data that suggests that even within the past, the history suggests that if the Fed is cutting within 1% of all-time highs, then we tend to see 14, 15% rallies even from that point. What is the estimation for how much room left there is to run?
Yeah, well, that's where I think that actually we could get that 15% rally, but perhaps from maybe 5% lower. So it's really about when we look out, let's say 6 months and 12 months, we know that the market is on average up a significant amount after the Fed starts cutting. But you have to get there first, right? You have to get through that.
The graph that we're looking at is the percentage of how much as we see from January starting here, February, March, April, all the way to September, as we can see right now. We can see how much the market has gone up. The purple indicates Dow Jones here, the blue indicates S&P 500, and the orange indicates the NASDAQ. So as you can see, January they were about the same, steady, but boom, you see a huge flip into NASDAQ right here. But as you guys can see, the S&P 500, the Dow Jones, the NASDAQ are all major keys into investments right now. And as you can see that they're going up. And stocks right now are skyrocketing. Like I said before, it is because of the fact that we saw interest rates being cut. But what does that mean? That means I do believe that we do have a little bit more basis room for it to grow a little bit more. Stocks will rise, but we'll see after Friday what the number is for Q3, quarter 3 of the year on unemployment rate. If the unemployment is down and a lot of people are working, you're going to see stocks go up. But if unemployment rate is high, that nobody is working, you're going to see a plummet on this. So it all depends on what's going to go on during unemployment.
At first 6 months. And it's oftentimes that first 3 months that tends to be the most
Bonnie,
treacherous.
If you're on here, screenshot
but
it for me.
it's treacherous if you actually just are fearful of if you're not braced for it. So if you view that more as an opportunity to reposition towards more, let's say, small cap, mid cap, more value names, that's where we think the opportunity can really arise. Because even though we don't think we're going to necessarily see a broad rally from here, maybe a little choppiness first, that becomes an opportunity to maybe move a little bit out of what has traditionally been called quality and more towards the value names, a little bit more cyclical.
Brian Jacobson, who's the Annex Wealth Management Chief Economist and Strategist. Brian, always a pleasure to grab some insights with you and some time ahead of the opening bell. Thanks so much.
Thank you.
Thank you.
Micron is set to report its fourth quarter results after the market closed today. The print will provide some key insight into how much AI demand is powering the chip maker. Joining us now with more and a breakdown of what to expect, we've got Yahoo Finance tech editor, Tech DH, Dan Halley. Dan.
They've seen some savings on lumber and some of the other direct inputs as well as
times, Brad. And the average return about
happened in gold this year. You take a look at GC equals.
We're going to get into commodities later, okay? Commodities is something that is huge right now, too. Trump, I don't care. Well, I do care about what Trump says, but not right now. Let's get to the... Trying to find it. AI product market to explode. Uh-oh. Huge, huge, huge.
Communication, it allows you to begin to ramp and build out these next-gen data centers, the grid's prepared, as well as the infrastructure
AI will be huge, guys.
And when speaking about the grid, the electrical grid, you're gonna there's so much that is being invested in upgrading these grids. How do you see AI playing a role in the upgrading of the grids? Will there be a role for AI to play to make grids more efficient?
Absolutely.
If you guys have any questions,
AI is going to be
comment
critical to enabling sort of the next wave of infrastructure. We talk about the grids as one sort of key use case, but it'll also play out in manufacturing and aeronautics and a number of heavy industries. But for the grid in particular, we're working with a number of partners. So in one case, we're working with a company called Utilidata. And they build smart meters and smart edge devices within the grid itself. And so if you kind of abstract what the grid is, it's really a bunch of components. It's transformers, it's substations, it's transmission lines. It's all of these interconnected endpoints that create this electrical system. And so what we're doing with Utilidata, we're actually embedding some of our processors in their smart meter ecosystem, and that allows for us to use AI to create a much more smarter and intelligent grid. And so what does that enable? So when you think about managing the load across all the disparate systems, most utility providers have to be very conservative in terms of how they're modeling the utilization to make sure that they don't get any hotspots. But by having that two-way communication, it allows you to have much more information to then optimize utilization across the grid. And that's another key thing that a lot of data center providers are looking to do. They're looking to bring more load, in fact, more renewable energy to the grid. So by optimizing the utilization, giving more data, more insights, it'll allow utility providers to have more certainty when they're able to bring on new workloads, especially renewable workloads.
And our thanks to Dion Harris, NVIDIA's head of data center product marketing, and also Nez Foray for bringing us that conversation. Now coming up, we're chatting some of our trending stories of the day. Plus, we are previewing what you can expect from Meta's Connect event that is going to be this afternoon. Stick with us for more right here on Catalysts.
saying right now, AI.
We've got 3 trending stories for you today, and it's all about
this
AI. So let's get right to it. The first.
AI stocks, guys. AI stocks are huge right now. Sorry, guys, I had to charge my phone because my phone was not charging, and I'm at 7%, and I need it.
Get right to it. The first.
So, AI is huge, and I cannot emphasize that enough. Look at this. This is a credible source that I use all the time. The 7 best performing AI stocks of 2024. I'm going to give you one right now. One is NVIDIA Corp. It has the performance year. If we go to the stock, it's the stock of NVIDIA. Let's go to stocks. Oh. Don't know what that means. Within the year, 194%. Anything AI touches right now is gold, guys. $123 right now. And it was sitting in the beginning of January. Oh, 2024 is right here. At $48. $48. Anything AI touches right now is going to be fire. It's going to be good. And I believe it will continue to go up. So if you can buy more, continue to buy more AI stocks. That is huge. Is the taco place open? Yes, it is. It is currently open. But stocks are huge right now. So those are the 7 best performing stocks. Sorry. The next one is Procept Biorobotics Corp, and it's up 148%. If we look at it, let's go to that one. What was the ticker symbol? PRCT. PRCT. It is up year to date within the year of 2024, 145%. This is crazy, guys. As you guys can see, stocks right now are at a beautiful time. We're starting to see stocks go back up. We're starting to see a trend happening here. But I'm going to release the other 4. SoundHound AI Inc. is up 135%. ISRG Intuitive Surgical Inc. It's up 63%. And if you think about it, these stocks here that are 60, 63, 55 have the potential to go up here at this percentage. So you still have more than 100% of room to be able to invest. As you guys can see, these things have gone up. AI stocks have gone up so quickly within the past year. As you guys can see, a trend. It just skyrockets. The 52-week high is 124. And the 52-week low is 121. So within the last, 52-week high is 140.76. My apologies. And the lowest it's gone in 2023 is, or within the last year, which would be September of 2023, $39.23 would be one stock. So with that being said, like I said, AI, here are the 7 best performing AI stocks, and this is coming from a credible source called NerdWallet. I like NerdWallet. I do like them a lot. But with that being said, you are starting to see a trend here. You have Intuitive Surgical, AeroVironment, up 60%, Pegasystems Inc., 55%, and Upstart Holding. If you guys want to look them up on the stock market, here is the ticker symbol. These things are massive right now. A lot of stocks are going up, and this is the time to buy. If you guys have any questions, comment down below. Would love to answer you guys' questions. But yeah, continue to comment, guys. Continue to comment. Like the live, please. It would be greatly appreciated. So, with that being said, we're starting to see a lot happen right now. A lot of stuff is moving within in the AI world. AI is huge. NVIDIA started working on 3D graphics for multimedia and gaming companies. That's why they're up. I mean, they're a gaming company. Well, they're part of a gaming company. Biorobotics. I'm assuming that they're just going to be doing robotics there. SoundHound. But right now, AI stocks are beautiful. As you guys can see, the numbers are there. These are the 7 best performing. I'm going to give you guys a second to screenshot the 7 best performing, and they do have potential to go up, which is going to be phenomenal if you guys continue to invest. So I'll give it about 5 seconds. Let me check on my phone, because I'm kind of upset that it didn't charge. 1 second, guys. Give me a second. So you guys can see, I'm live. I'm live right now. It's pretty cool. I've never done this stuff before. But yeah, just guys, continue to invest. That's the best thing I can tell you guys right now, is continue to invest, because investments right now are the key way to go. So with that being said, just AI stocks right now are just beautiful. AI stocks are just phenomenal. So those are always safer bets, because that is long term. If you guys have any questions, comment down below. Would love to answer them. Let's see here. I wonder if I'm live on Facebook too. No, not yet. Not yet. I'm still trying to figure out how to get live on Facebook, but it won't let me. But if you guys are on here, make sure you guys are liking, subscribing, and continue to support. So yeah, we're going to continue on with the video.
One, OpenAI pitching the White House on a massive data center build-out. The AI startup calling for data centers as
thing for U.S. investors to understand is how broad you are. So the images
is, and so they're better.
Year remains.
To discuss how to play both assets, we've got Cynthia Murphy, who is
I'm trying to find. I don't want that there. Let's go back to Google. I love Google. Mortgage applications, that's what we're going to talk about next. So mortgage applications hit a 2-year high. Mortgage applications hit a 2-year high. Is that good? Is that bad? What are we thinking, guys? Comment down below if you guys are on. Comment down below. Mortgage rates have gone up. So what are we thinking? What are we thinking? What are we thinking? What are we thinking there? I think that we're in for a wild ride. I just don't know what's going to happen there. I really don't. And it's kind of a scary thing to figure out. But just bear with me. But mortgages have gone up. The applications have gone up. And that's due to the interest rates falling. As the interest rates continue to fall, we're going to see a rise in applications. When interest rates fall, people borrow more money. That's just a simple fact. They're just going to borrow more money. I love Yahoo Finance. Mortgage applications have jumped to its highest level since July of 2022, driven by homeowners seeking to refinance their loans and rates as they drop. People are going to refinance like crazy if they are above 7%. I think they got it as low as 6%. I don't know what the average mortgage rate is right now. Applications refinance on purchases a home in the week that ended September 20 rose 11% week over week, according to the Mortgage Bankers Association, the MBA, not the college degree. Refinancing applications jumped 20% during that period as more consumers sought to take advantage of falling mortgage rates. It's the second consecutive week of double-digit application gains. Refinancing made up nearly 56% of applications as a typical summer home buying season wraps up, according to the MBA, Mortgage Banking Association. As a result of lower rates, week-over-week gains for both conventional and governmental refinance applications increased sharply. The average rate on a 30-year fixed mortgage dropped steadily over the summer, falling to 6.09%. If people got their mortgage rate above anything above 7 or 6.5, they are definitely reapplying and refinancing. As of September 19th, according to Freddie Mac data, that's down more than a percentage point from a year earlier. Let me exit out of this. Mike Fitzpatrick, founder and division president of Legendary Mortgage in Myrtle Beach, South Carolina, said he's seen a strong increase in his pipeline in the last 3 weeks as more consumers are able to qualify for mortgage rates under 6%. But with that being said, you guys know that there is going to be drama around the U.S. because when there's a lot of applications, that means there is going to be a lot of competition to purchase these homes. I think it's more psychological than anything else, Fitzpatrick said. Refinancing applications were 175% higher than a year ago. The signs of life in the mortgage market follow a slow summer home buying season that saw many potential buyers stay on the sidelines amid limited inventory. Right now, the inventory sales of new homes fell 4.75% in August compared to a month earlier. The sale of homes right now, there's not that many homes, and the homes that are being sold right now will get bought. They are going to get bought out, and we're going to see that amid this season. So, like I said, guys, if you guys are on the TikTok, make sure you guys are liking. That goes a long way. If you guys are on my Instagram, like. And if you guys are on my YouTube, please like as well. And subscribe. We would love to have you guys continue to be on here. I love every one of you guys, and I love doing this because this is a lot of fun. Just to talk finances all day, honestly. So, I love this, and I hope you guys are continuing to enjoy it. But thank you guys for tuning in, and I'm just going to continue to make more videos. And if you guys have not seen the videos yet, make sure you guys go on the YouTube, because there is my videos upload to the YouTube, so that's a good thing automatically. I'm still trying to figure out how to get it on Instagram and TikTok and all that as soon as we're done recording. But if you guys are on here, make sure you guys are tapping the screen. Tap. It helps and it goes a long way. But back to the video. Back to the main story. So again, with mortgage rates falling, interest rates falling, you're going to see a surge in applications like you guys see right now. Calculated risk finance and economists, MBA mortgage application increased in a week. Mortgage application increased 11% from 1 week earlier, according to the data Mortgage Bankers Association weekly application survey for the week ending September 20th of 2024. The market composite composite index, a measure of mortgage loan applications volume, increased 11% on a seasonal adjusted basis from 1 week earlier. On an unadjusted basis, the index increased 11% compared with the previous week. The refinance index increased 20% from the previous week and was 175% higher than the same week 1 year ago. The seasonal adjusted purchase index increased 1% from 1 week earlier. So as you guys are seeing right now, everything is just starting to increase. Don't want that ad. How applications move during the Feds. But before I get on out of here, is there anything you guys want to discuss before I get on out of here? I think that's pretty much it. Like I said, just, yeah, be prepared for what's going to happen here, here soon. How have we just moved on the Feds? But before I get on out of here, is there anything you, but yeah, stocks are going up, applications gone up, and I appreciate all you guys that tuned into the live today. I will be live Monday, Wednesdays, and Fridays to go over every financial literacy thing, especially with what's going on in the market right now. So like I said in this video, if you guys missed the video, you guys can go on my YouTube and find it. And my YouTube is Chavez Financial. I'm going to put it right here. I put it on the comments down below. Let me put it on the comments down below. That is my YouTube. Can I pin comment? Yes, I can. So, with that being said, I love all you guys. I appreciate everybody that tuned in. God bless everyone, and I'll see you guys later. Let me end the live.